Good morning. Today is Wednesday, June the 29th, 2016. The pre-market, it went to $1.60, $1.70, $1.50 something. Right now at plus 147, 3.2 million in volumes, which is pretty decent for the start. Yesterday, I talked about this divergence because I am expecting the continuation of the trend. However, impatiently keeping an eye on this system to the upside here, take a look at this 60-minute MACD, very, very poised. I saw how this thing throughout the day yesterday acquired momentum, acquired poise, it became parabolic, and in watching that, I understand that you need a more organized negative divergence on the 15 to be able to turn this monster around and have the continuation. I also briefly talked about channel regressions. And the channel regression here is basically being met. If you watch my video from yesterday, I said that 203 was the threshold, hardly 204, 203.50. However, in watching this system, and if I maximize the daily chart here, as a matter of fact, I'm not going to do it here, because if I do it there, I'm going to change the zoom that I have ready for the picture coming up. So let's not do that. Let's do it over here on a chart that is not as consequential, as important. Let's change this to a daily, and then let's zoom out and take a look at this. I'm going to move this guy over here. See, if we project a channel here based on these tops, the channel regression says over here. I don't consider that a possibility. I just don't think so. But the thought crossed my mind, because on this system we curve the channel down here. Yet another thing that you can do is grab the channel regression tool right here. There, the tool malfunctioned for a second. Then you can go in here, edit, and extend to the right. And what is this thing saying? 206. Now, if it does that, which I guess it could, if it does that, what do you think is going to happen? Well, first of all, that will be a pullback on trend. The trend has been established to the downside, number one. And number two, that's going to make for a hugely powerful negative divergence. Very dangerous stuff. Because the weekly is already pointing down, and that thing is just going to explode to the downside when it turns. So that's going to be interesting. Here's the opening coming up, and we are at $1.64 now. So that was the opening at $1.67. 3.9, just shy of 4 million in volumes. It just grew by 1 million in a minute, $1.88 to the upside. And this was my concern, because you see, I really wanted to get on the continuation, but I said, this is a very lackluster 15. This thing will continue. It's interesting. Remember yesterday, I called the continuation here. That could have been a trade. And then I called the continuation here yesterday. That could have been another trade. Take a look at the price going up. Now from the bottoms here to here, this is already a $6.50 pullback. And these pullbacks on trend really changed the perspective on people's minds about the market, and the misinformation available in all of the media outlets mislead people into thinking, oh yeah, things are great. Things are great. See, the market's going back up again, no problem. But these people don't understand technical analysis. They don't understand trending. They don't understand channel regressions. They don't understand that this is a pullback. When you have seen these charts and studied the dynamic of this technical analysis that I do here, you understand that this will not sustain. Here's a look at the 60-minute time lapse. This is the closing yesterday, and here's the opening. Take a look at the weekly shrinks a little bit. The daily advances lower a couple of points and flattens. The 60 advances from minus 120 to minus 0.88, and we know what happens to the 15 there. We can go here, and let me show you the 5-minute time lapse. Here's the pre-market, and there's the opening. You look at that 5, 15, hourly. The 1 minute is technically topping. And I can show you really fast the 2 and 4 hour charts. The 2 hour grab momentum to the upside, the 4 hour turn, we know that the daily flattened. $9.37, technically topping on the 1. There is a most definite pattern here on the 5. But if I bring the 10, it's a downside pressure pattern. The 15, a downside pressure pattern at best. Extreme direction on the hourly. 940, 945. Here's the time lapse from 940 to 45. Take a look at that 15. Advances from 64 to 77. The hourly is not moving, and the 5 minute is staying within negative divergence. 1 minute is working on a pattern to undermine the 5. 950, building up a 1 minute pattern. 955, a pretty good looking divergence here. Take a look at the volumes, almost 18 million. I will talk to you in a little bit about understanding this continuation really with a 60 that turned with this much power. It controls the trend for a brief period of time. We're in the middle of that mini trend to the upside, which is really going against the overall long-term trend. And so the 5 minute gets in here, throwing grapefruit, the down cycle gets tired, and we actually got a pretty good indication of the continuation right here. This was the pattern that ended the pullback against that 60. The trend started here. This is exactly one of those patterns that I talk about. This is the 1-2 pattern. The first possibility is the trend starts here, and you have a poor man's divergence. I'm starting to call these divergences that don't retest all the way down, poor man's divergences. And that's one of the 2 possibilities. The other one is you get the full retest. You get a good established divergence. But nevertheless, this particular point on this 1-2 pattern can be construed and understood and used as an entry instrument of the continuation here. See what I mean? And so it starts here, it's interrupted by a smallish little pullback that picks up the 5 minute. You see it pulls back here, and right around there, if you put your eyeball here, that's when the 5 minute turns after that, and then you have a little rewind here on the 1, and then you have a continuation. From this point, you could have said, I'm going to trade the 202s or the 201.50s, and I will show them to you here shortly after the top of the hour. So 10 o'clock, 10:01 actually, here's the transition from 9:55 to 10. That 1 minute is getting long. It's definitely undermining the 5-minute chart. And then here's the context. And I can show you the 60-minute time lapse. Take a look at that hourly. The 15 advances higher. The daily doesn't move, and the weekly actually advances lower by 1 point. It actually, no, retracts higher. Sometimes those things are confusing. Here's the price going back up after this thing runs out of steam, and that 5-minute wants to continue. 10:05. Not much. I'm going to show you this continuation move here. 10:10. Nothing changes much. For long, the one price is flat over here. 5 minutes seems to be technically topping. Extreme direction here and on 15. 10:15. Flattening on the 5. We advance a little higher. New pattern on the 1. Extreme direction here. 10:21, drifting higher. 10:25, the price continues to drift. The divergence is there. The 5-minute is losing momentum. I think it's possible for a pullback here. 10:30, this thing's rolling over. 10:40, there's the price pullback that I'm talking about. Take a look at that 5. Now, the sustainability of this is totally questionable with this context. 10:50, the drop couldn't sustain, but it definitely introduces weakness to this 5. And it has technically topped it. 10:55, divergence doesn't go away. 11, 5-minute is just pulling long against a very, very powerful uptrend. Take a look at the 60-minute time lapse from 10 to 11. 60 advances higher, the price moves a little bit. The weekly contracts a little bit. The daily turns off slightly. It's a pullback. It's a pullback on trend. Trust me. It will come back down again, and it will come back down again with force. The thing about this pullback is that it builds up resistance because it pulls the technicals on the lower time frames. See over here, the hourly pulled its technicals up. So on the drop, we're going to have the makings of a pattern. Unless the drop is just catastrophically strong, which it could be because the larger context definitely is in place to pull the price down enormously. With that said, let's take a look at the continuation move. So here's that 15. I was yesterday more interested in a continuation to the downside, but I never really gave the hourly the importance it had. When an hourly gets poised like that, especially after a big drop like this, it's going to pull back on the channel regression here, right? And so this thing here cannot turn this amount of momentum. This 5-minute played itself out over here. It technically topped that 15. And then take a look at how the lower time frames just lose the ability to continue driving the price lower. Take a look at that 1 minute at 2:15 doing the turnaround. And that 5-minute was throwing grapefruit. It was tired to the downside. If you remember, I don't know, I put this thing on video. I said, no, this thing is going to skyrocket. It's going to go up. My intuition was perfect because I've seen thousands of patterns like this where they get up against the trend like this. It starts losing momentum. It's all broken. The down cycle is done. Support comes in underneath. This is one of those 1-2 patterns. There's your upside divergence on the 1. You're looking at the 5. The 5 turns up slightly. It comes right back down. This is the establishment of trend here, right there, boom. And then you have the pullback, and this thing turns. Take a look at that 5, finally turning. If anything, at between 225 and 230. So take a look at the 202 calls, the quarterlies that expire on Thursday, which is tomorrow, on the 30th. Today's the 29th. Here's 225. This right here would have been perfect, a perfect entry for the continuation on that poised 60-minute. This poised 60-minute. Note how I did this study yesterday, 75% return on an entry at 215, which would have been right there. Because I was incredibly convinced that at this point, this 5-minute was not going to be able to drive the price down anymore. We lost the momentum. Take a look at the 1 minute coming in on the support there. And that's the moment. And then there's your rally. And then that creates a pattern on the 5. But you have to understand that this is the beginning stages of the continuation. This thing is just too powerful. Now over here, the 1 minute technically tops right there at around 245, 250. And that gives you this 75% if you were just not convinced of the upside, but definitely understanding the continuation. The one thing that I was trying to build, rather than my brain was wired towards a continuation to the downside, so I was trying to build a negative pattern over here, and the build up over here is just bullshit. I never really thought for a second that this whole thing was a pullback on trend. The trend had been established to the upside line at this point. It's a mini trend in the middle of the catastrophic long-term trend, but right now we are mini trending up inside the channel of the long-term trend. It gets a little complex. If somebody's watching this thing, they're probably going to get lost and they're going to think that I'm crazy and I don't know what I'm talking about. But in reality, I'm doing this for myself, and I just choose to share this thing here for whomever, mostly Giancarlo, my son, and any other person that deems this information relevant. If you study this, you will make millions of dollars, because this is the most accurate and sound technical analysis available on the planet today. I know it sounds arrogant, but it is a fact. I just don't have the cash to back up my extraordinary claim, but the cash is coming. Don't you worry about that. So anyway, that was a 75%, which is marked by these two entries over here. I'm really liking using these ovals over here because it allows me to correlate the entries. Now, this second entry here at 225, right there on the pullback on trend, gives you a head and shoulders. And you can just even weight it. Take a look at that 5. Boom, on the plot. By 230, the price goes to 113. So I can put in here 113. The difference is not that abysmal. But imagine entering over here. You sustain the pullback that took place here, right there, that pullback that took place right there. Because you see, on the continuation here, there's a little marker created on the 1 minute, so it down cycles a little bit here, and you have a continuation, so that creates some marker. Then on the continuation, you create a very entrenched downside pressure pattern. This thing is going to stop the price from advancing. You have a 5-minute pattern, you have a 15-minute lackluster pattern. At this point, I changed my charts to a 10-minute just to flush out any type of divergence. What I said, this thing looks like shit. So at 3 o'clock, you have this pullback, and the pullback takes a while to play itself out, because take a look at how that 1 minute builds a head and shoulders in there, and so it plays on the 5-minute, and downside pressure over here on these 15. So you take a look at the price length versus indicator. Then you have the 5-minute on a negative divergence and the 1 minute on a negative divergence, and obviously the 10-minute that I showed you. So that plays itself out. But take a look at the poison at 60. That 60 is not going to allow you to turn this. So the 1 minute turns on this noise right here. There's your retest, and then it gets immediately long. The 5 minute plays itself out, pullback's done, you have a continuation. And now we are at the end of the trading day, which is right around here. And if we input over here, let's see, I can actually put a marker here. In the 50 minutes of the ETFs or exchange traded funds, right around 408, this is at 204. So that's at 96%. So at that point, you're at 96% at 408. And then obviously we have the continuation on opening. This entry here gives you this monster return at 217% on opening. And so in here we reach 4 o'clock, and that's the end of the market. And then we can continue this thing here with the upside. We can go here. This is the pre-market or the end of market yesterday. And so from here, take a look at what happens. This is the opening. Boom. The reason I'm showing you this is because I want to evaluate whether or not I would stay. Well, we have done in the last few months hundreds of exercises on openings like this, where we study very closely the poise of the charts. We have a pattern in here on the 5, but we don't have a pattern of support on the 15 that goes along with turning this monster. So the momentum to the upside is extreme. And I showed you earlier the 2 and 4 hour charts that have turned at this point. And furthermore, do we have direction on the 5? Yes. Do we have direction on the 1? Yes. We're very poised to the upside. So in reality, there's no need to execute an exit right here. But you're at 217%. So you can definitely say, you know what? I'm going to pull the trigger. But understanding the dynamics that play amongst time frames, so we can how they transfer their influence on one another, we expect the 1 minute topping. And take a look at the 5, still poised. Take a look at the 15. The 15 on its own interval here moved higher, right? So my expectation is a continuation. There's a continuation. Now I am establishing a negative divergence on the 1. This is 955. And it's right around here. So that gives you 226.92, 226% return. And now you have an established pattern over here, even on the options chart. If I call the price chart again, there's the divergence. So over here, I would start thinking, I'm playing with fire. I already made 200%. If I go take a look at the long term, this thing is getting ready to stabilize over here. I'm losing momentum. I'm hitting the channel regression. This is a downside pressure pattern. I have a 5 minute divergence building up in here. If I stay longer, I'm just allowing greed to control my trading. Yeah, it did go higher, not by much, by 10:30 here. We can follow along here. So there's that 1 minute. Technically wanting to top that 5. You can see the 5 in here. Turning sideways. Here's the context. And now we have a triple topping over there. Take a look at that 5. The price is having a hard time advancing. It drifts a little higher. We've been on this thing. So at this point, why would you want to stay any longer? This is 10:30 that gives you this. So this, for me, is a no-go. Anywhere in this area, here is your exit. At 200%, are you kidding me? This is a phenomenal return. And most importantly, we understand that we are running out of steam here, and this thing calls for a regression. And then understanding that we're trading something that expires tomorrow. So no need to overstay your welcome, but you get out with 200% in your pocket. This was a textbook continuation. What took me away from this is my stubbornness to build a negative divergence on the 15, to turn that hourly and continue the long-term trend. That really is what worked against me. And if I show you the 2 and 4, take a look at how they have turned. Isn't that interesting? Furthermore, take a look at VXX. Continuing the downside here. It's amazing how VXX has been hammered like this. But take a look at the introduction of extreme weakness to the weekly here. This is going to definitely change the weekly onto an up cycle here soon. If I call on the 2-day chart, the 2-day chart is definitely going to explode once again. Now, what do we need for this thing to work? Let's call on the 2 and 4. We are still in the middle of this thing working itself out. We still have a lot of direction, so we need to wait for a nicely established pattern. It will come about, and it will make itself noticeable. We just need to have patience and wait for it. How about, let's do a quick round, take a look at Q's. Q's doing the same thing. Russell doing the same thing, and when I click on this, I'm looking at the 15, I'm looking at the 60 here, I'm looking for a pattern, I don't see it, all I see is the same grapefruit pullback and then the continuation. Over here, take a look at this kind of retest that we had in here. If anything, that's just more indication of the continuation. My vision got tunneled on a continuation, and you need to let this 60 play itself out. That really is what happened here. Take a look at diamonds. The same. Last but not least, a quick glance at FAS. Same thing. Now take a look at on the daily here. We have an upside pressure pattern. What I do is I compare the price drop versus the indicator drop. We have a lot of upside. If I call on the MACD here, let's see if the, yeah, take a look at how it's not perfectly done. I would need to do Photoshop magic for you to show you this, but see how short it is over here. And we're not even matching the tops with the tops, but it is already too short. And this is interesting because take a look at how long that 15 is. Even the 60 is now long. Very revealing indeed. One quick note that I would like to add is, for the most part, this is the setup that you want to spend most time with right here, because this gives you the larger context. That way you don't get tunnel vision. Over here, you can really see what needs to happen next. I talked a long time ago about building expectations and understanding what the charts call for next. We were, see, on the drop on the weekly, we were short. Okay, and so that shortness, along with the upside pressure pattern on the daily, that's clearly visible in here, will empower this system in here to fuel a pullback. This is exactly one of those patterns that I talk about, the 1-2 pattern, where the uptrend begins here. And now at this particular point, take a look at how the 60 was still pointing down with great force, but we were technically bottoming on the 15. So this is exactly one of those 1-2 patterns. The first possibility is the trend starts here, and you understand, okay, the 60 still has direction, so we have fuel for a continuation. The continuation brings about the price retest that builds a divergence. It's just that when this divergence appeared, and I remember being on it, I was so caught up with the drop of the market that I just didn't want to give validity to this 15, and I did say, I know it's going to pull back. I know that. I called the pullback, yet I decided not to trade it because I said, why go against the trend? But in fact, looking at the long-term picture here and the bigger context, that gives you the ability to say, you know what? It's a big drop. It's like the analogy that I do with the tennis ball drop from a 100-story building. It's going to bounce back, and based on the amazing amount of drop that we had, the huge drop is $12 and change. You know, a pullback of $3, $4, $5 on a $12 drop is not a big deal. Take a look at the power of the pullback. We went from below 199 on the first go to 202. That's over $3 right there. That's the power of that divergence. It's 364. Then you have the pullback that we've been analyzing right now, and the continuation. Now, the entire length of the pullback up until right now is $7.28. That's amazing. This is an amazing amount of experience and knowledge that is being compounded with the years of experience that I've been accumulating in here. So even though I didn't make money on these moves, the amount of experience accumulated here is phenomenal. Phenomenal. So that's my 2 cents. Don't keep tunnel vision. Keep it mostly on this setup over here. Don't lose this picture. This picture gives you the better context so that you can call the next move that needs to happen based on what these patterns are telling you. So there you go. 11:35. Price continues to drift. You know, on this study that I did, I changed my chart to another expiration, another strike price, and when you come back, it erases the whole thing that you did. That is so bullshit. This is the same chart, but all my drawings, all my markings are gone. That is so discouraging for this platform. It sucks. 11:45. Price continues to drift. We are now at 409 over here. Not that we would have stayed for 409. This thing I plotted at 410. 293 versus the 217 or 226% return. Would it be nicer? Yeah, but you add a lot of risk. The likelihood of a pullback here is high. You already made 200%. Why play with fire? Let for the next event to build up and then participate in it. 11:55. This thing continues. Now at 414. Pushing 300%. Noon. Price continues to drift. Made it to 206.25 almost. Extreme poison at 60. The daily pointing up. I can show you the 60-minute over here. From 11 to 12. Take a look at that. Daily advance. The weekly shrinks. 1 o'clock. Take a look at the drifting of the price. Poise of the 60. We're technically topping this 15. I think the price needs to advance a little lower here and keep pulling on the technicals on that 15 to build some sort of a pattern. At this point, there's no entry on anything. We're just looking at this thing. See, here's the drop, support, pullback, or long. We continue to develop the 15 lower, extremely poised 60. 2 o'clock. We have this little drop that I called, and then it cannot sustain. It comes back up. We're forming a pattern, pulling the 15. 15 is now obviously pulling long. Larger context, extreme poise over here. It's a pullback. We just need to build some sort of structure over here to take this thing down. Pay attention to this pattern. So it's 1 o'clock here. It's 2:39 right now, New York time, but I'm looking at the time lapse over here. Take a look at this. 1 o'clock. All right. So this 5 minutes is long. It already suffered a pullback and continuation here. It's interruption of the down cycle pattern. It's a pattern that broke out right here. So we're getting long on the 1 minute as well. We establish a technical bottom. So at this point, you're like, let's see what happens. Price pulls back, continues. That's the continuation I called. There's your pattern, 110, 115, boom. 115, the 1 minute is turning on a very well-established upside divergence. It's an upside pressure pattern, but it really is a divergence. It's so close. And then the 5 minute is long. You're just below the 206s. You could do the 206, the quarterlies that expire tomorrow. Short term, take a look at what happens. Upside, upside. First regression, that's okay. Upside. 145, take a look at that 5 minute turning. turning. Upside. Boom. 205. At 2 o'clock, take a look at that hourly on the upside. The 15 continues to pull against what the price is doing. And it looks like we're topping out there on that 1 minute. I would be comfortable right here around 215, 220. I would have been comfortable with this price movement. We're establishing a negative divergence on the 5. So again, the 206 calls, the quarterlies that expire tomorrow. Here's the entry, 115, and you take it to 213 for a 26% return, and then take a look at this pullback, continuation. If anything, at 225, that's 221. You take it from 87 to 116 for a 33% return. Totally callable on the uptrend happening here. Then the price starts meandering over here, and it looks like that 5 minute wants to bring the price down. Isn't that interesting? 3 o'clock, we had this drop that was obvious over here, and then continuation again. Larger context, extreme poise on that hourly. Take a look at that 2 hour, the 4 hour. Not much to report. Here's what this thing looks like. Topped out over here, not that I would have stayed for that noise. 41% and continuing the upside. See? Almost done with the trading day, and man, little bullshit pattern. This thing comes to an end here. But take a look at this craziness. You know, I've been looking at this thing, and the only thing you can say about this is total and utter market manipulation. I understand a pullback, but this is ridiculous. We're talking a pullback that's $8. Now, what's interesting is that this manipulated market that we are seeing develop in front of our eyes is not going to sustain. It's not going to sustain. The technical picture, as much as they manipulate this thing, just keeps on getting worse and worse and worse. Because all this does is creates an entrenched negative daily divergence again, or a very nasty pullback on trend. And so the drop is going to be nasty. Here's a glance at the 60-minute time lapse. And boy, that 60-minute is not moving at all, nor is the 60 or weekly. From 3 to 4, no movement whatsoever, other than that 15 create this pattern. I did a look around the market, and they all look the same. There's cues, same configuration. Russell, same configuration. Take a look at that 60. Very shallow negative 15-minute divergence. Take a look at that 60. And VXX. I look at VXX, and VXX says more downside. That's what I see here. More downside here means more upside here. Look at the 2 and 4 hour charts. But on VXX, extreme poise still. Cues, poise to the upside. Russell, same. Diamonds, same. So that's it. The move of the day was this continuation that I showed you in here. And take a look at this in the aftermarket. Not aftermarket, but the additional 15 minutes of the exchange traded funds. The price continues to come up. And over here, I mark these 2 additional points all the way to 63%. Whether or not you would stay for that much, probably not, because it means too much risk. Especially if, see right here, that right there would be my choice at 215. Right here. And yes, we see that.
this thing continued drifting onwards, but good luck staying for that noise. Take a look. Too much risk. So anyway, that was the move of the day, and it looks from looking at VXX that the price is going to go down on VXX and continue onwards to the upside over here. We're definitely starting to create a reference point in here from which we can build a pattern on the 15 to undermine the 60. Let's see where our trading adventures take us tomorrow. It will be Thursday, June 30th. Until then.